Hello, family. Today I'm going to go over the breakout boxes and how to use them. This indicator on TradingView so you can easily place buy opportunities and sell opportunities. So without further ado, let's go ahead and get started. So I'm on your JPY on the 2-hour time frame. The indicator for this is going to be breakout finder right here. And then as you can see, my settings are pretty much 2 and the 200 close. Okay, when you see these boxes, the blue means sell opportunity, look for sell, and the red means buy, look for buy opportunities. Okay, now at current market, as we can see, this trend has been in an uptrend for some time on your JPY. We're starting to get some consolidation at this area. You definitely want to do your top-down analysis to see where we're at in the market. And we're almost near a weekly high, which we are from October of 2022, 17, right? So this is kind of like a nice supply zone where most people are looking to sell. And as you can see over the last few days, you have this rally of buyers in the market and then some exhaustion over time. Now, when you see a blue and red box, you primarily want to use the 1 or 2 hour time frame. This is one of the strategies where you have your get right now money, where you're taking about 20 pips on a trade if you're on a 1 or 2 hour time frame. In this scenario, you definitely want to see more of a rally and see how it's choppy right now. It's a lot of consolidation going on, a battle between buyers and sellers. But when you start to see something like this, a rally and the box like this, these are typically better trades. And when it's immediate, you'll see how the market will take off for some time and then it'll get back to that box. Those could be a little risky from what I said, well, from what I have experienced. So I would typically use a lower lot size. When it's immediate, where you have your break, your drop, and retest, I love those trades. So the way you do this is the way you do this strategy or this technique is you identify your box, and then you're gonna go ahead and just highlight it, right? So I like to highlight mine green. You're gonna look for, if it's a blue box, you're gonna look for the last selling candle that broke and closed above. I don't want to use that box. Sorry, I'm gonna go to the 1 hour. If it's a blue box, you're gonna look for the last selling candle that closed and broke above. And if it's a red box, you're gonna look for a buying candle that pushed the market down and closed below that box. So once again, we're looking for the last selling candle that pushed the market above and close below the box, which is this candle right here. That's your breaker structure, right? And so once you get that, you're gonna wait until the market gives you 100% back to the last selling candle, because when you get that, that tells you that there's pretty much a change in character if you're into smart money. Now, I'm going to keep this very simple. Once I see this 100% retracement, next thing you want to do is wait for the pull back into that zone or that box is and take the sale. Now, you definitely want to take trades in fresh zones. So here is a fresh zone before all of this had happened. Those are the less riskier trades, okay? And I say that is because once these orders have been filled, sometimes the market will close above this head and then continue up. It'll violate that area. So you did get a second opportunity right here where you could have taken a sale, once again in around that area, and then you could have caught at least about 40 something pips, 49, 50 pips. Stop loss will always go above the high, okay, of the head. So this is pretty much your head and shoulder pattern if you really want to dissect it, okay? But the stop loss goes above the head. In some cases, the stop loss might be up here extremely high, If it is, you definitely want to drop to a lower time frame to find another swing high or a swing low. Now, another thing I check for is whether or not the market is ready to sell. I have my 50 moving average here, where as we all know, when the market is above the 50 moving average, we know that the buyers are in control. And when the market is below the 50 moving average, the sellers are in control. Right now, the buyers are still in control, but I also have my indicator on here for divergence. As you can see with divergence, the trend is starting to weaken. This red line is telling me that, and that eventually it's going to fall off. It's going to sell. Another thing I look for is also the sentiment on a pair. I go here on my Forex book and go down to community and sentiment right here. And I look at some of the pairs. I don't look for setups on this. I just use it as confirmation. So the pair that I'm interested in trading is Euro JPY. It tells me that there's 91% of orders that are looking to go short versus long. Okay. So that gives me more of a bias. So right now, as you can see, I'm building a case on why this would be a good sell opportunity. I have consolidation. I have a trend that's weakening. I have my breakout box that tells me it's good to sell. I have my weekly high area where this market is currently at. So once you are ready to place your order, you can do a limit order or you can do market execution if you have time to look at the market. For your take profit, typically I go look for imbalances in the market and I use my fibs as well. I do take partials definitely at 20 pips and then I'll stay in the trade. Now I'll look for gaps, which is once again imbalances in the market. And the way I identify that is I look for the last selling candle where the market broke above structure right here, this last swing point. And then as you can see, the market it just took off. It didn't retest. It never came back down like this to continue back up. So I'm expecting the market to at least come somewhere in this area and sell somewhere close and then possibly continue up. Who knows? So for this trade, I would be looking for this type of risk to reward ratio. Something like this. Okay. If I was going to hold it for that long. Now, you have some cases where the market violates, and what that means is it closes above the head. If the market decides to push up from this consolidation zone, what you're going to do is wait until it goes back into the same zone and take the buy up instead of the sell. And finally, as your last confirmations, for those who love trend lines, you can easily just draw a trend line. Okay, I always use this ray. What you want to do is get your swing, point your swing low, and then wherever this line touches first in this trend of these points, that's where you want to stop at. That way you're not cutting your money, you're not setting yourself up for a possible disaster of a trade. So another thing, if you're not sure if it's ready to sell, you can do the trend line, wait for the break in the trend line, catch the retest, okay? So it'll look like this. You'll set your alert, retest, break and close below, retest, and then sell. And to do the alerts, you just click on that line and you put crossing down. Once bar close, put a note that you remember, break below, look for sell. I do it in the alert name as well as the message because it goes directly to my cell phone. So I hope with the blue boxes and the red boxes, this is pretty simple. For a red box example, this is the same thing, same concept. So right now, right here, I have this red box, okay? Once the market closes break structure and give you your 100% retracement, which is right here, So you put the market push down, give you 100%. You're gonna go ahead and map out that, extend that blue box or red box, I'm sorry. And so once the market comes back down into the zone, then you take your buy. Now, as you can see, it looks like we might have missed the entry by maybe a pip, and it happens. It's up to you to use your best judgment on whether or not you want to chase the market. There might be other opportunities on a lower time frame if that market does not catch your order by a couple pips. But there's more opportunities. So that's what a buy looks like. I hope everybody enjoyed this video and thank you for tuning into my channel. I love you guys and happy trading. Take care.